Why smart traders use higher time frames. Hello, ladies and gentlemen. Well, somebody has to be first. How's it, Tom? Welcome. Let's get started. Let's have a look at what's on the go today. Today, I'm going to talk about why smart traders use higher time frames and how you can use time frames to succeed. We're going to go over that a bit later. First, I'm just going to go to that trading platform so we can just have a look at what the markets are doing. People have complained that it's a little bit difficult on the other chart because of my, I don't know, thing on the back, logical trading, that they can't see the chart or something. Maybe it's the colors, but that's all good. And yeah, let's see if everybody pitches up today and we can start talking about a few things. But looks like the US 500 is still going up. Nothing's changed. Still really bullish. Maybe I should extend that trend line a little bit. And it just keeps on moving. How's it, Brewman? Welcome. Good to have you back. Good to see you again. It's a bright and lovely Thursday afternoon here. I don't know what time it is on your side of the world, everywhere you guys are, but it is winter here. So yeah, keep myself busy doing YouTube rather than going to the beach because it's a bit cold for that. And drinking coffee. So, you know, it's coffee with Rob, so we might as well have some coffee. Bitcoin, eh? Did I leave Bitcoin on here? Of course I did. Of course I did. I left Bitcoin on there. There's your Bitcoin. Now, interesting fact. You had this big spike up here. Perhaps Brewman can tell us why. I don't follow the fundamentals of Bitcoin. But what I'm looking at is it has now spiked above that 110 level. And it's given us another double top. So shall we put that in then? So the double top is now at 112. So now the area is just between 100 and 112. So actually between 98 and 112. It's expanded a little bit. It didn't break through there. It's just created a seriously big double top on Bitcoin. I wonder if it'll stick around. Let me just redesign that trend line over there. I just want to have a look and see, you know, if Bitcoin was to break down below this 110 again, perhaps we could be going back down. I wouldn't be too excited about it flying. Let's just keep an eye on it. It is Bitcoin after all. But yeah, this gold trade is messing me around. Doesn't seem to want to do its thing. Let me just refresh this. Is this, I don't know why, but this platform doesn't refresh the prices on the charts. Let's see where we are. So gold is giving me a wee bit of a headache here. And if I go to the lower time frames, which we're going to go over that today. We're going to go over this lower time frame thing and higher time frame thing. That's why I titled the video "Why Smart Traders Use Higher Time Frames." Doesn't mean you have to be smart to use higher time frames. I just use that as a title, but you got to use all the time frames to actually, you know, encompass a good trade sometimes. And if I go down the time frames with gold, I'll show you in a moment. You'll see that it becomes more and more evident that it's starting to drop off short here. But that's why we use the higher time frames and we stay in the trade and we wait to see what's going to happen next. I was actually hoping it would break through and go up, but yeah, it looks like gold fooled me for now. What have I done there? Okay, on that side. Yeah, and I play around with the keyboard, then I mess around things on the other side. Let's have a wee look here. How's it, Blue Mango? Good to see you. Okay, Brent crude oil, on the other hand, this one was doing okay and now starting to fall back a little bit, but I'm going to stay in the trade even if it goes into the red. I'm not too concerned. As far as I can see with Brent crude oil, it is kind of trying and trying to break through levels, and I think oil's got a good chance fundamentally of going back to the upside. We'll have a look at the news in a minute, but gold, I mean, Brent crude oil does have a very good chance of becoming more expensive, as they say. This is the one that surprised me the most, is the United States dollar, South African rand. I did take it fundamentally. I'll be perfectly fair. I didn't I didn't take this based on the charts. If I had, I would have taken the trade much later on. I took the trade quite early because I just feel that the way the politics are going and the way the USA is threatening countries that align with BRICS and the tariffs and all the rest of it, for me, the Rand should go down or weaken. And it's not. It's actually staying strong. So, yeah, that sometimes you get caught by surprise with that. With all my experience and whatnot, you know, one thinks of these things and then you look at it and think, but, you know, it's still here. I still think it's going to weaken. I still think it's going to go to the downside, and I'm still pretty confident on that. Am I married to the trade? Probably, but I just have that inclination because of the fundamentals surrounding the whole trade. Then I was also short on the euro, Great British Pound, and that's because it's just sitting on this resistance level, and I don't think it's going to push through. I think it'll do its usual story and just drop off again because there will be some obvious changes. Let's just see if we can get everyone on board before I start going over any form of training or information or stuff that will be of great interest to you guys. Then I will go through the time frames and we will have a look at the best way to use the time frames and take sniper entries and that sort of thing. And we'll have a look at the charting. But don't forget, guys, you must separate the charting from the strategy. Always separate the charting from the strategy. It's really important to do that. Otherwise, you all know what happens. You start believing in the charts like there's some kind of magic, like this going to somehow make you money, and then they don't. And you end up kind of surprised as to why you didn't make money from the charts. I must just be careful of my trailing stop loss here, which is in profit, but yeah, I moved it up to break even, and now it's trailed up a bit. So I don't want to get taken out of the Brent crude oil trade, but that said, if I do, I'll just get back in again. It's fine. Not a problem. It's in profit. Tywald. How's it, Tywald? Yeah, how's it? And Ruben says yo-yo. Yeah, well, Bitcoin, I wouldn't call it so much a yo-yo as, let's just go back to Bitcoin just out of interest. And I wouldn't call it so much a yo-yo as it's in that range. You know, we trade the three ways. We trade with a trend, we counter trade the trend, and then we trade in that range. And what's happening with Bitcoin is it's just simply staying in this range. It's not moving out of that range. And then you can use your trends to take your trades within that range, let's say. And yeah, this is another classic example of a range. It's sitting in that range. It doesn't want to escape. It has tried once or twice, but it doesn't want to. Now it's formed that double top. Just means the big money, that's what they've decided on, and that's how it's working. Bitcoin has become like every other thing. The market's created, the traders are, or the big money's pushing it whichever way they want to. And you just have to follow along with it. It's all under control now. You don't have control of it anymore. They do. Right, so if everyone's around, I am going to start going over what we need to go over. It won't take me long, though. I don't think it's going to take me hours on end to go through how to trade on different time frames, but I would like to perhaps get started on it and give you guys some information on it. Now, what I always say is a lot of you guys like to trade on the 5-minute time frames, day trade, as they call it. These days, they call position trading swing trading. And now, in my day, what swing trading was I'm just going to get a little pencil here, is if you took the trade here long and you went up and it got to the top and then you sold it there and it went down and it went down and then you bought it again and it went up and then you sold it and it went down, that was swing trading. So you never got out of the trade. All you did was turn your trade around, up and down. That is the true meaning of swing trading. Now, I don't want you to just learn the terminology of the stock market. It's not that important. What naming things is not that important. But just so that you can understand my terminology, as I call it position trading, it's the same thing. But position trading is effectively you take a trade in the market, you measure where your risk is going to be, you measure where your take profit should be, which you want to push it out as much as you can, and that's a position. And then if you take a position in the market, you can literally walk away from it, leave it there, and come back at a later stage and see how it's doing, which is what we do, which is what we've been doing on, for example, these trades here, where you can clearly see the positions are in place. The gold, the Brent crude oil, the Euro, Great British Pound, United States dollar, South African rand. On that particular platform, those 4 trades are positioned. You can walk away, you can leave them, you can come back at another time. That's positioned. But on the time frame front, basically what you've got to do is, if you're trading on the higher time frame and you're taking position trades, is what you want to do is you want to look at it as a 4-hour trade is, think of it as a 5-minute trade that's going to take that much longer. It's going to take an insane amount longer to trade it than it is going to take on a 5-minute trade. So a 5-minute trade is going to work that much quicker. So if you were trading on, this is the Nikkei, the JAP 225, if you were trading on the lower time frames, for example, the 5-minute time frame, you're obviously going to see these candles moving around a hell of a lot faster. Well, they should be, but but if you're trading it, you're going to be seeing those moving around a lot faster. Now, this big purple area is the area I've taken from the day chart. Now, you're going to find that if you're trading on the 5-minute charts, you're not going to be able to take your levels from the day chart. It's going to be too far away. You're going to have to take your levels maybe from the 30-minute, for example. Your 30-minute level will give you a good level. Now, my issue here is the information that you're getting on a 5-minute chart on these candles is only valid for 5 minutes. And I equate it to the value of the information that you're getting. So in other words, you are going to have to become what I refer to as a high-stakes trader. And the reason I say that is, if you take this trade, you're going to have to put levels in place that are going to affect the size of your trade. In other words, the amount of points to stop loss. So if you have a plan in place, and you've got to have a plan, like I said, you've got to have your business plan, which is your strategy, which is separate from the charts. And you want to impose that plan on 5-minute trading, which is very unreliable information, because that information is really only valid for the 5 minutes. So now what you want to do is impose that $250 stop loss on a minimal amount of points. So for example, if you were going short on the Nikkei right now, I wonder if I can get a crosshair in here. Yes, I can. So if you were going short, you would in all likelihood want your stop loss on the 5-minute chart at 39,725. 39,725 would be your stop loss of $250 from the price that it's at now, which is 39,662 or something like that. Okay, so not very far away. And that would be now your $250 stop loss. The chances of it reaching that are probably pretty high, because if I take this back up to the 4-hour chart, 39,725 is there. Right there where it is now. Right there on that line. And if I look at that on a 4-hour chart, which is reliable information because I got this resistance level from the day, that isn't even a proper stop loss, because it's going to take you out effectively on the daily chart on exactly where you expect it to be anyway. Your stop loss on a 4-hour chart would be somewhere around the 40,800 or higher, fact, 40,900, with a view to making some kind of profit way down here. But it's going to take you a hell of a lot longer to get to that point if you want to take that trade. But if you want to look, I want to take this trade short, and I want to take it on the 4-hour chart. Should I or shouldn't I? I'm looking at a red candle that hasn't closed yet. Maybe I'm a little bit impatient. Maybe I'm unable to sit on my hands. What do? Well, then I can actually drop it down to the hour, see what I've got there. And if I look on the hour, I'm looking at it and thinking, it actually closed on a green candle and the red candle is still open here. That hasn't closed. So that hasn't given me an indication yet that it's closed. And then I take it down to the 30-minute, and I kind of see an undecided candle and then a red candle. So I really don't have good information there either. So in other words, this trade is telling me, don't take me just yet. Don't climb in. But if I'm really impatient on the trade, I take it down to the 15-minute chart, and then I've got the red candles telling me, yeah, you know what, you can actually go short on this trade. But how reliable is that information? How good is that information? Is it strong? That information is going to take me down to these levels here, which are not very far away on the 4-hour chart. So while on the 15-minute chart, I might say that looks like a good trade, it still might not work out for me. So you've got to be very careful of these sniper entries, because they can turn against you in an instant. And if you want to look a little bit closer, you can take it down to the 5-minute chart, which is clearly telling you that you want to get into the short now. My point is this. If you're trading on the H4, rather go and have a look at the day chart. What does the day chart tell you? The day chart, a little bit more information, is telling you that yesterday there was a little signal here where it looks a lot like a hanging man. It looks like it wants to tell you that there is a short possibility here. Now you've got some information. Take it to the weekly chart. What is the weekly chart telling you? Big red candle, another red candle. It's actually saying to you, do you know what? This might actually, if you look at the monthly chart as well, if you look at above it rather than below it, you've got more information, which is telling you, actually, you should be going short on this particular trade. Then how do you take the trade? How do we take the trade from there? What do we do? How do we get this trade to work for us? And I'm just checking if there's any questions here. High end is good. High swing point trading, usually trading the top and bottom swings in ranging markets. Usually trading the tops and bottom swings in ranging markets. Yeah, I'm just referring to what we call trading. So swing trading is when you buy the trade and then you sell the same trade, and you buy the same trade and you sell the same trade. That is actual swing trading. At least that's how we used to call it as terminology. Terminology is really not important. I'm just trying to point out to you the reason I call it position trading is so that you understand what I'm saying when I call it that. That's all it is. Terminology really doesn't mean a lot to me in trading. When people have names for things and abbreviations and whatnot, I find it really silly. At the end of the day, the most important thing for you to do in the market is make money. That's all. Nothing else really matters. What I'm going to do now, because I've had a look and researched that, is obviously take a trade on the Nikkei short, even before that candle's closed. Why would I do that? Because I looked at the day chart, and on the day chart, there's a little candle there that's saying to me, this is short. That's not undecided. That's like a hanging man sort of candle. And if I look on the weekly chart, it's also telling me that this is short. So you know what? I'm actually going to pull a short in and just leave a short in place and see what happens. And it's actually quite easy, because all you've got to do is take your stop loss and say, do you know what? I want my stop loss to be at, I'll say, let's be ridiculous and say at 41,000. See if that trade can work out. Oops, too many zeros. I guess. Okay. See how that works. This thing is messing me around here. Not exactly 41. Let's go 40,800. This thing doesn't want to give me. Why won't you? Okay. That's the way you want to be. That's fine. 0.5. 0.1. Okay. Contracts 243. Oh, I see. It's on a. You see, you got to put it on a sell. That's why it's getting upset with me. All right. Stop loss at. Right now, got to get this right again. Not going to let me, is it? Going to mess me around until I'm blue in the face. So I'm just going to actually start this again because it's driving me nuts. Okay, let's just do this. Let's just do that. Just go back in here. Put it in here. Okay, now we're getting somewhere. Okay, right. I'm just getting all confused by what's what here because I'm used to using different platforms. Right, so now we put the stop loss up here, which is quite far away. It's really, really far away. Now you want to work out that your stop loss is 1% of the account, so $250. How are we going to do that? One lot is 94, two lots is 188, and I believe it was at 2.5 lots, 236.40. That's close enough. It doesn't have to be exactly $250. Now we've got our stop loss in place, but can we make money on this? Now you gotta really consider what you're doing here. Now, will I make money on this trade? So you want to take your take profit. So I want my take profit at 38,000. Will it make money? Don't know on that. Let's see. Yeah, it will, but not a lot. So actually 41,000 is a little bit far away. Let's take it down to 40881. You can play around with it and see where you want to come out. And then your loss is 216 and you're making 275. And then you could actually just place the order and take that trade. And then you put that trade in place. It's as simple as it goes. So using the higher time frame to determine your position is actually far better than using the lower time frame. The lower time frame, what it's going to do for you, people think it's a sniper entry, but it doesn't really tell you where the market's actually going over time. What actually tells you better where the market's going over time is the higher time frame. That's actually better if you're trading, for example, on the 5-minute charts, to go up the chart and have a look at where the market's going and then take it back down and just trade that way for the day. So, for example, I know over a weekly that this is bearish. I know over the daily that this is bearish. And I'm trading on the 4-hour. Since everything's bearish, I'd rather sell on this particular product, for example. Just using that as an example. No other reasons further than that. Same goes for all of these trades here, which I just want to reset and just see where we stand on those positions. And let's just have a look. So I know that doesn't all make sense to everyone, so perhaps you'll have some questions. But what you've got to understand about charts is charts cannot predict the market. Charts will never, ever, ever predict the market. What charts will do is they'll give you the ability to manage a trade. So you have a trade, You take the short trade, you say, I want to take a short here because it's in the resistance. I feel like it's going to go down. And then all you do is you manage the trade. You say, well, in that case, I want a stop loss over here. You put the stop loss in place with a take profit down here, and you put the take profit in place of what you want. And that's positioned, and then you leave it, and then you hold thumbs because the market's 50-50. And you hold thumbs that it's going to go in the direction that you want it to. How's it, Greg? Good to see you again. So, yeah, there must be some questions based on that. But I kind of go over this on a regular basis in my videos as much as possible because it's really important for you guys to understand that the charts don't have any predictive capability. They can't predict the market. They can't tell you which way the market's going to go. All they can do is give you the ability to see a pattern, to see the three patterns that we trade, for example, the trend, the counter trend, and the range. That allows you to see that. And further than that, I mean, it doesn't give you much more than that. Now, I've shown you how we get our resistance area, how we get our support area. And if you are in a range, it's always good to like look at the trend that's in that range and just see if it's counter trending in that range. Don't just take the trade. You see, in the old days, what you might do is just, oh, it's hit resistance. Let's just go short and take it out of the resistance level. What I like to do these days is just put a little trend line in and just see if it breaks through the trend line. Gives you more confirmation of the trade. Gives you a better idea that the trade's going to go in the direction that you expect it to. Because when it's in an area like this, as you know, it could break to the upside or it could break to the downside. And as you saw with what I did with the Japanese yen, I mean, the Nikkei a few moments ago, where I actually went short on it, I actually took that trade. But just go to the day chart. What is the day chart telling you? Oh, if I look at the day chart, there's another one of those candles. Look at that little red dot and a long tail to the bottom. Another one there, tails to the bottom. It's looking a little bit weak. And then if I go to the weekly chart, a bit undecided on the weekly chart. There was a big green candle up there, but it was bearish. So yeah, it's a difficult one to take, but I've already got this one in my arsenal, so it's a bit late to take it out, let's say. So we're going to leave it in place and see how it goes. Right. Yes, we do use trailing stops. Let me just show you on the other account. It's a little bit easier because I do have a trailing stop open over here, which gives you a good idea of a trailing stop. So on the Brent crude oil, the Brent crude oil moved into profit, quite a decent profit here. It started to break through this level, which was a support, became a resistance, and it started to break through. So what I did is I moved my trailing stop up into cost, and then I put a trailing stop on it. Well, it was a stop, and then I put a trailing stop on it. So now it's trailing. It is a bit far behind, but what I will do is when it gets up to the profit level, which is up here, I won't leave the target profit there. I'll actually take the target profit, I'll move it away, and I'll take my stop loss, trailing stop loss, and I'll move it right up to here. If it comes back and it takes my trailing stop loss out, I may target. If it doesn't and it carries on going north, I make more money. So that's how I take my profits if I can, unless I'm feeling completely like I've lost confidence in the trade and I just need to take the profit, in which case there might be some fundamentals, speaking to me, and then I might dump a trade based on that in profit. But other than that, I will trail the stop up and use the trailing stop where I can. Some accounts don't give you the trailing stop capability, in which case you just have to do it manually and trail it up yourself. But okay, everyone can do that and everyone will do that if they need to. So keep that in mind. You can actually trail a stop up yourself if you need to. But yeah, I do use trailing stops. Trailing stops are actually how I take my profits where I can, rather than taking profit. But sometimes I'm not looking because I'm a position trader. I put the position in place and I walk away. I come in the morning, early in the morning, and I look at what trades I want. And then if I take trades throughout the day, then I leave them. And I don't sit watching charts. So I can't really sit watching charts all the time. It drives me nuts. I like it, but you can't do that. Your eyes go strange. So what I do is I leave the trades. And sometimes a profit will get taken when I'm not looking, or a stop loss will get taken when I'm not looking. And it just happens. So in that case, you've made the profit. It doesn't upset me in the least because I've made the profit that I expected to make in the first place. And it's good for the account. So I'm not too perturbed about that. If you're a 5-minute trader, then you're going to have to sit here and watch your trades all the time. You're going to have to sit and watch your trades constantly. It's going to be something that you're going to have to do. And that you don't even need a trading stop for that. Because you must remember, when you're a position trader, what you're doing is you are advertising your position to the market, no matter what you do. Now, they don't hunt out your stops. Nobody cares about you or me. Really, we're too small. If you were a huge company with huge amounts of money, then somebody might care about where you've advertised your stop loss. But when me or you, your money is going to be lying there in the liquidity somewhere, and it'll just get swooped up with everything else. So that's why I take my stop losses and I actually put them a little bit away from the areas where I think the stop loss might be found, so that if the money does swoop in there, then the big money's not close by, and then my stop loss stays in place and it turns around and goes back the other way. Yeah. I think you would have seen now that I did show you the break-even as well. So you move it up to break-even when it's in profit. So, for example, this trade, right? It's not very fine profit at the moment, so I'm not going to do anything with it. But let's say it moved down here, and let's say it's $150 in profit. It's a decent profit. It's looking decent. Then I will bring that to break-even, and then I'll start putting a trailing on it as well, and let it trail down that $150 instead of $250. And then, when it gets close to here, then I'll bring the trailing stop right up behind that, right up close. In some cases, what I might actually do, if I see a trade breaking through this level here, I might actually add to the trade. I might actually double the trade up in profit going down, so I can make even more profit. So you've got a second trade on the same product. That can sometimes be good for your account as well. That makes sense. Anyone? Okay, have I done it again? Yeah. Every time I try and do something with this keyboard, I'm on the wrong monitors or whatever the case. But yeah, there we go. So who's top chat today? I don't see Shane here today. Maybe he's gone to bed. I'm not sure. Tommy was first today. We've got Bruman. Got a couple of regulars here today. A couple of regular guys in. That's fantastic. Let's have a look at the German DAX and see what it's doing. The German DAX, look at how nicely it's turning around off of this level. So there's your, what I call railway tracks. You've got your trend, and you don't, in the old days, we always had both lines, the resistance and the support. And if you look at your trend, it's running beautifully to the upside, nice and bullish, and it's staying within that level, staying within the railway tracks. In other words, it's every time it hits the top, it comes down, hits the top, it comes down, and then you buy all the way up. So our next buy will be somewhere down these levels here, and then it will carry on going up. If it stays bullish, that's trading with the trend. So that looks good. Hi, Rian. Greg asked, do you like the daily or the H4 better? I prefer the H4 these days. I do prefer the H4 these days. In the old days, I only liked the day. I used to trade only on the day. And if you're a bit more cautious and you want to be a little bit more cautious about your trading, the day is actually a very, very, very good place to trade. And you can take your levels off the weekly. And the daily will hold you in good stead. You must just be very patient with the trades. I just like to trade on the 4 hour. And the 4 hour gives me the best results with everything, timing wise, picking a trade, all those sorts of things. I just always found that the 4 hour works best for me. I started my trading career obviously on day charts, and look, we didn't have computers, so we had no choice. But when computers came about and we could choose time frames, I preferred the day charts for many years. And the early years of my trading was very much done on shares. I was actually in the beginning, in all fairness, quite scared of Forex. And it is one of those things, and a lot of people are. I mean, I was nerve-wracked by Forex because we weren't used to it as much as we are now. And it just looked like something that could go insane and take all your money. But then you warm up to it, you get used to it. And so I transitioned from shares over to indexes. I traded indexes for a long time while investing in shares. Obviously, I have my share portfolios, which keep me going. And then from the indexes, I started dabbling in the Forex. And obviously with the indexes, the commodities first. And then I started dabbling in the Forex and getting used to it. And then I realized, well, there's really, if you put a strategy in place, it doesn't matter what you trade. You can trade lemon peels, orange peels. It doesn't matter. If there's a market made and you apply the strategy and you take away the charts, then suddenly it all comes together. Suddenly you realize that it really doesn't matter what you trade. What you have to understand is what time you're trading on, how fast you're trading, and then you just have to get that aha moment, which it took me a long time to get that aha moment, which is why in the beginning, I transitioned from the shares to the indexes, through the commodities, and then into the Forex and whatnot. And these days now there's crypto and everything. All I say is you got to get the aha moment where you realize that it's not the charts that make you money, that the charts don't have any predictive capability, and a win rate is not going to make you money. Only you and your strategy and your business plan can make you the money. The strategy being the one I give you in every single video, particularly towards the middle or end of the video. We talk about the strategy, managing the stop loss, managing the trade. That's what the trade's about. The lines, they give you this capability to see, oh, look, there's a bullish trend. Oh, look, it's hitting the trend resistance. Maybe it's going to go short here. You could look at this and say, I know, I'll take a short trade on that because it's bouncing off the resistance, because I feel like it's going to go down. You and I both know that whichever way we look at this, we take this short inner bullish trend, we're going against the trend, that's really not good. But either way, it's 50-50. It doesn't really matter. But if this comes down and breaks through that support and gives you that clear signal, you're going to be that much more confident that it's a short trade. You're going to take that trade and you're like, I can't lose this, and it's going to go the other way. And you think, how did I lose that? Because it's a line. It's a bunch of lines. There's nothing in there that predicts which way the market's going to go. The only thing you can do is manage your trade. That's how you make the money. Let me answer some questions while I'm here. Hi, Rob. Just got online. Have you analyzed Bitcoin yet? I have, but we'll go back to it. Don't worry. We'll go and have another look in a moment. Not to worry. Do you look at the charts, say 7 a.m., do some analysis, and then put all your trades in for the day, then check in every few hours, move trailing stops? Raven asked me, do I look at the chart? Yes. So in the morning, I'll go through the business and see if there's any trades. But bear in mind that some of the markets are still sort of ticking along and closed, and some of them are open in my side of the world because I live on the African side of the world, or Cape Town. And, you know, my time zone is different to America, for example. It's way off. So if I'm looking at the American market, the S&P 500, for example, is ticking along, or the US dollars is ticking along, whereas the European markets are busy opening. So the European markets might be tradable, where the US markets, you're thinking, maybe I should come back later. So what I'll do is I'll look at the markets that are close to my time zone and see where we stand and what I think is going to happen next. Maybe there's some news that's been around. And then if there's some good trades out there to take, I'll take them. But I will come back later in the day and have another look, maybe 3-4 times a day. Come back and just have a look and see what's going on. Also have my mobile phone where I can check what's going on. I have my MetaTrader 5 on there, which gives me all the information on my cash account. That's all I need, because I don't need 20 different charting packages to tell me what's going on. And then I can see which way the markets are moving, what's going up, what's going down, and what might happen next. And then I like to take my trades. I have taken millions of trades on a phone, but I do like to take my trades off my computer, because I've found many a time I'll look at my phone and I'll look at the chart, and because I'm out maybe at a restaurant or something, and I'll say, ooh, I need to take that trade, and I'll take the trade. And when I get back, I'll think, why did I take that trade? Because when you look at the bigger picture, it's slightly different. And that can mess you around a little bit. So I do prefer to come back to the computer, to the office, and just have a quick look and see what's going on. That said, in winter, I tend to spend a lot more time in the office because it's winter. Where am I going? So unless I'm at the shops or out, or whatever the case, or seeing someone, or whatever the case. So yeah, I am around a lot more often to look at the trades in the winter periods. But in summer, I like to go and hang out at the beach, do my thing, go for walks, whatever the case, and I don't want to sit and watch charts. But yeah, I look at it at a certain time, and I pick my trades, and if there's a trade or two or whatever to take, I'll take it. If not, I won't. And then if I think I want to come back and look at something later in the day, I will, or I'll put an alert on something to see if something's changed. The trouble with alerts as well, you put an alert on it, you think, oh, I've got an alert on that, and you get the alert when you're walking through the bush, and you think, and you look at the phone, and you're just not sure if you want to actually still take that trade. The alerts do mess you around a little bit as well. So yeah, to answer that question, yes, yeah. Is it a bad idea to trail stop losses behind candles on the higher time frame? You're trading on the H4, but moving the stop loss behind the day one candle at the end of the day. It's not a bad idea, but I would prefer to trail my stop loss on the time frame I'm trading on. Let's just put it that way. But if you move up onto the higher time frame, you must remember you are literally trading on that higher time frame's timing. So if you start putting losses and profits on a day frame, then you're actually trading on that day frame. If you're trading on the 4 hour, then you're actually trading on that 4 hour. Just keep that in mind. Tiago, thanks for your vids. I've been more disciplined now that I've been using the stop correctly and seeking 2-to-1 profits. But I've been losing a lot more than winning, but I'll keep going. Here's the thing, Tiago. Everyone loses. Everyone loses. I know there's a lot of people out there that will tell you they don't lose. That's my little laugh, yes. What's happened to this chart? Goodness me, let me just see what's going on here. Chart is like just totally disappeared. Oh, that's interesting. Why would you do that? Let's just go over here and I'll take it back. See if it comes back. Boom. I'm just gonna find the JAP 225. There's a Germany 40. There's a JAP 225. There it's back. Why did you disappear? What a strange thing. Okay. Anyway. Yeah. So yeah, as I was saying, everyone loses. Absolutely everyone loses. Don't let anyone tell you that they don't lose. I know that some people make it look like they win every single trade. It's easy to do that on videos. I can sit here and I can talk a whole lot of rubbish and tell you I'm winning every single trade. And I can only show you the winning trades if I want to, and hide all the losing trades. What does that help? I mean, really, it's best you know what you're getting into. I actually had someone ask me today, why do I harp on the fact that, 60 to 80% of traders lose? But I answered, and it's a perfectly fair comment, but, and because he's trying to say that we should be positive and we should, look forward to making money in the markets. But as I answered in the comment, isn't it, in all fairness, better for me to let you know what you're getting into? Let you know that, you know what, 60 to 80% of traders lose. And there's a good chance that you're going to lose. We all like to think that we're going to be at the top 30% and we're going to make all the money and we're going to win. But we're up against it. We're up against people that have been trading for a long time, like myself, 33 years, many others. We all lose. Every single one of us lose. If you see some of the losses that I've taken in the past, you'd think, why do you trade? Because I make more on the wins at the end of the day, and I make wins and I actually do win. And my investments make me an absolute fortune. So the markets do well by me. But if you were to see some of the losses, you would be like, that's crazy. And it is, but you've got to learn to take losses. You've got to learn to lose those amounts sometimes. I've blown some big amounts in the past, let me tell you something. But I've made some big amounts in the past as well. What I see people doing is trying to promote to you that you can't lose, that you'll always win. And that's not how the markets work. The markets will always be 50-50. The charts do not have any predictive capability. They cannot. And retail traders, that's us, make up such a tiny percentage of the market. We make up a tiny percent of the market. The big money is moving the markets and you're just riding the wave. It's not a nice thing to hear, because you get into the markets and, I mean, you guys can comment here. How many of you guys have paid for a course? I mean, I don't know. It's crazy. And the course teaches you all these lines, and they teach you that you can win, and they tell you you're never going to lose. And it looks good. I mean, particularly on a demo, it looks easy. But then you come back and you start putting real money into it, and then suddenly you can't win. And you wonder why that is. And there's so many things that happen in a day, so many things that move the markets around, that prevent you from getting that win that you wanted. Even myself, after years of experience, the beginning of the year, I called the S&P 500. I told you guys it's going to go to 6,600. But the other day, when there was geopolitics and I wanted to trade, I was like, no, I can't trade this now because there's all this stuff going on and I'm going to end up with a big loss on this S&P 500. You wake up on the Monday morning, it's all over, and it's gone without you. It's just the way the markets in real life are going to treat you. It's not like when we try and show you how to trade and we draw little squiggly lines on a whiteboard and we say, this is how you follow a trend. And trends don't work like that. Look how trends work. This is what trends look like. They're all over the place, man. Look at this. It's like these lines are not going up in nice little squiggly jiggered lines like they always draw for you. These lines are, come on, they're all over the place. This is what you should be learning on the lines. And that's what those courses don't go into reality in many cases. A lot of people will do replay trading. Now, I can do replay trading for you, but you know what the problem is? I'm going to take the S&P 500. I'm going to go back and do a replay trading. You know what the problem is? I know where the S&P 500 is. I know where it's ended. I know. So what's my bias going to be when I start doing replay trading for you? My bias is going to be, I know where it's ended. I know if I just go long on most of the trades, I'm going to show a profit. That doesn't work either. The only way to show you trading is to show you that you take the trade and see what happens next. And that's it. There's no other way to show you trading. And like I said to you, take away this thing that you think the charts are going to make you the money. The charts are going to give you the trade. Your strategy is what's going to make the money over time. So now the problem is, for example, the chap who said you're not going to make, you've been losing. Most people are losing more than they win. It's supposed to be 50-50, but it never is. You always lose more trades than you win. That's you. You have to get around your own mentality, your own psychology to start winning more trades than you're losing. How's it, Tim? Rob, the aha moment for everyone should be the separation of charts in the business plan. I love the fact preached everybody every live session. Thanks. Yeah, no, that's I have to preach it because it's so important that people get that, and that's what makes the difference. Oh, top left corner time frame. Sorry guys, my video is there. My little face is in the top left-hand corner, isn't it? I can't see it over here, but I know it's there. I'm on the 4-hour time frame. Sorry about that. Okay, I've tried putting my video in different places on these charts and on the different charting packages because I'm using the 2 different charting packages to show you guys trading at the moment. And yeah, I've tried placing the video in a place that suits everyone and everything, including the news. So yeah, excuse me for that one. It's the 4-hour, guys, all right? And I'll try and be more careful where I place the video in future, but it is so difficult to place it so that you guys can see everything. Okay, where was I? Right. I like drinking, Bruman. Germany 40 selling. Yeah, Germany 40, as I was looking at it earlier, does look kind of sellish. Hi Rob, greetings from Laser. How's it, Mohammed? Good to see you again. I'm just going through the comments. When I drink, I forgot that I lost. Most people don't forget when they lose, whether they're drinking or not. Accepting and being willing to lose is the hardest hurdle for most people. Nick, how's it, dude? That is a very good comment. Accepting and being willing to lose is the hardest thing to overcome. The psychology of it, it's so painful losing. Doesn't matter how much you lose, whether it's $1 or $1 million. It really doesn't matter, and it depends on the person as well. But if it's your first time taking a loss on anything, it's the most painful time. After a while, you kind of get used to losing that $1, so you make it $2, and that's painful, and then you make it $4, and that's painful. You get over it, and you get to a point where you have an idea of where your threshold is. But losing is always painful. Yeah. Drink and trade, you will win. Oddly enough, Bruman, that has worked for me before. But yeah. It's not a good idea, though, to sit drinking and trading. All it does is make you braver. That's all it does. Best to assume you lost your stop loss money before the trade. Actually, that's a very, very good comment, Nick. What I would say, and I'd like to point that out, and because Nick just pointed it out now. Assume that you've lost the money before you trade is an excellent way to look at trading, and it's something that I've always done. And I have mentioned it to you guys before, but let me just mention it again because I always forget that we have new people coming on board, and sometimes I have to go over the things again. But the way I always explain a stop loss is that's the cost of trading. That's how much the trade is costing you. So you've decided $250 per trade or as close as. So this trade is costing me $267.75. I know that if I lose that money, I've paid for it. I've budgeted that in. I'm going to, if I lose that money, I know where I stand on this particular account, that I've lost that $267. But if it goes into a profit, if it goes into a decent profit, and I'm able to take that and put it up to break even, then suddenly the trade is costing me nothing, and that's where my profit is. Now my trade is free. Now I've got a free trade. A free trade. In other words, no matter what happens, I can't lose a cent on that trade. And it's going into profit. So even if it comes back and it takes my trade out at cost, yes, I blew all that profit and I have to accept that, but it didn't cost me anything. It was free, an actual free trade. But every trade that you take is the cost of trading, and it's costing you the amount of money that you're prepared to risk. And you've got to put that into your mindset as well. Every time you take a trade, write it off. That's it. I'm paying for the trade. Just like you would, for example, if you go and buy stock for a shop and you buy something that costs $250 and you intend to sell it for $400 and make a profit. But it's lying on your shelf, and it's lying on your shelf, and eventually it rots and goes off. So now you've got to write off that $250 that you paid for that product. You see? Very much the same thing. You've paid for it. That's your cost of business. If you lose it, it's gone. Don't mind losing at present. Means I can put my money into a new, better position. Greg, the one thing about, you see, if you lose too many trades, then you start not having enough money to put into a better position. But if you have a budget and a plan, and you know how much you're prepared to lose on any given day, any given week, every given hour, then you can work within that strategy and you can work within that business plan and understand that if you take those losses, you can make that money back. And I know I've explained to you the analogy to you guys before, where guys come in and they want to trade on the 5-minute charts, and they say, well, I'm going to come in for 2 hours and I'm going to trade, I'm going to make $200, and then I'm going to go and relax. And it, best laid plans of mice and men. People come in, they sit down for the 2 hours, and instead of making the $200, because we're very presumptuous when we say we're going to win $200, and we sit down and we lose $400 instead of making $200. Now the question is, what do? Do you sit there for the rest of the day trying to make that money back? Or do you say, well, my 2 hours is up, I'm going to close shop and leave now with a $400 loss? Well, if you don't have a plan, you probably won't know, and you'll probably make the mistake of chasing or doing something equally ridiculous. If you do have a plan, then you'll follow that plan. Most people don't. You'll be surprised when I tell you, like 90% of people will not have a plan for that because they're presumptuous. They believe they're going to make that $200 every day. And they'll come in and they'll make it for 3 days. And on the 4th day, they'll take a knock. And then that plan's gone to hell. Because if you said, I want to make $200 a day, then you obviously over 5 days wanted to make $1,000. And now you've lost $400, so you're only $200 in on a Wednesday. You by Friday, you might have lost that as well, and you might be on zero. And then you've got to make a completely new plan, and then you start rethinking your plan, and you go into that ever-ending cycle of doom, looking for a new system rather than strategy to try and make you the money. Yeah. Lots and lots of money in latest chart patterns. Best simple discretionary trading. Lots of money. Latest chart patterns. Best simple discretionary trading. German 40 selling. I started to be profitable only when I learned that a loss is part of the trade. I just trust the plan and act accordingly. That's pretty much position trading. You take the position and you see what's going to happen. And the DAX is selling just like the Nikkei. We did take a short on the Nikkei on the other account. Now let's just go and have a look at what's happening over here. And how's that one doing? Well, it's doing nothing at the moment. It's actually $1.88 in a loss. We just took it earlier. So we've taken a sell trade on the JAP 225. We've still got the long trade on Brent crude oil on this one. Okay. This one is doing okay. And I'm just using these charts because someone complained to me that my badge in the background is affecting the clarity of the charts. I'm just using these charts for now. It's fine. Okay, so doesn't matter, makes no difference. Okay. Okay, so with the German 40, just keep drinking, you will win. Can you explain how you draw the trend line at the NASDAQ in the day situation? Yeah, I'll have a look at the NASDAQ. I just want to go over the German DAX quickly. And I actually still have to go after Bitcoin again as well. The German DAX, totally right what someone said. We are in a bull trend. And you want to be taking buy trades in a bull trend because the trend is your friend. And if you go against the trend, there's an all possibility that you will probably lose. But markets being 50-50, it is in the short term bearish going down to the bottom level here. And then it'll probably be a buy lower down. So you might want to take the buy off this level rather than the sell off of this level. You know, when it's in a bullish trend, you want to be taking the buys. If it breaks through the support, then you want to be taking the sells because then the trend has changed around. So that is a correct answer, Forcia, that you want to be trading with the trend if you can. Bitcoin, I said I would look at Bitcoin again. And Bitcoin, as I said earlier, is in a range and it's created a new range. Bitcoin has created a double top. There's the double top. And the double top is now at 112. So the range was between 100 and 110. The range has kind of expanded to 100, 112 or 98, 112. And it's widened slightly, but it's still in a range. It hasn't broken out of the range. Now it's hit that 112. It's created the double top, started to pull back. What I would do is I would wait and see what happens on this internal trend in the range. So I've drawn a trend in the range, and I would see if it sort of bounces off that trend support or if it breaks through that trend support to give me the direction of trade for that particular trade. NASDAQ, somebody asked for the NASDAQ. Let me just go and have a look for the NASDAQ. Now, it's not going to be much different to the S&P 500 because the NASDAQ is pushing the S&P 500 at the moment. And what's pushing the S&P 500 in the NASDAQ is NVIDIA. It's going up, and that's why everything is going up with it. What I'll normally do, if I want to take a level, is go to the day chart. Once I'm on the day chart, just put it on a line chart to get closing prices and just have a look at what you've got on the line chart for closing prices. Then we can just draw that trend in if you want to. If you want to use a trend, there you go. You want to see what the railway line looks like on the top. Probably going to be there, but there's only 2 or 3. You need 3 touch points, and there's only really 2 there, but it's no problem. I just want to see what we've got here. And we can take it from there, because on the 4 hour, we might have a few more. Because we can move these things around on the 4 hour. What I normally use the day for, though, is to get my support and resistance in. And my support and resistance will be... Let's quickly just get ourselves a little rectangle here. Draw it in. And that is a level that we're looking for. Just take it up to there. So that was the resistance. See, every time it got there, it came down. And guess what? It broke through. It's broken to the upside. Wow, look at that. On the daily, if that comes back through there and comes back down to here, it might come back to retest. So that's quite interesting as well to have a look at that. But let's take it back to the candles, because you know why we trade on the candles? So we can see the green and red. It helps us to see which way it's going. And then we can just take it back to the 4 hour chart. Okay, let me just see if I can get this to give us a better picture. Okay, now these are daily levels that I've drawn in here, and you might want to look at the 4 hour and see if there's anything on the 4 hour that's going to change anything on that, and it doesn't really look like it. It looks pretty strong on the 4 hour as well. So I don't see any problem with this. So what I would say is what you're looking at here. I'm just going to make this a bit bigger so you can see what's going on. What you're looking at here is to determine whether it's going to stay above this level in the bullish trend and keep on going up, or whether it's going to break through here and come back and retest. It's broken through a major level and it's on the up and it's in a very, very bullish trend. So I would say I would only buy. I won't do any selling here. Only buying, and I'd keep to the buys. I mean, even if you take it to the day on this, boom, you take it to the day, that's a really strong upward trajectory, strong bullish run. And for me, that's just a buy. You just keep on buying. I'm not going to sell that. If you're new to trading, NASDAQ is not really your best choice of instrument. I would rather go with the S&P 500. It's a bit more mixed and it's a bit easier to trade. The NASDAQ is very volatile, eh? Although I look at this now, it's actually quite relaxed, but yeah. This is being pushed up. Mr. The NASDAQ is pushed by about 7 shares. Not much more than that. And that if they move around, that makes all the difference to them. So just be careful of that. The SPX 500 is a little bit easier to trade. I'm just going to fix this so that it becomes readable again. There we go. That's, you see how the SPX 500 looks almost similar to the NASDAQ. Looks almost the same. Doesn't look much different. But like I say, if you're new to trading, it's probably better to trade the S&P 500 than the NASDAQ. And then the German DAX is always a good one to trade as well. What you're getting with the S&P 500 this year is a lot of noise, a lot of information in the background, which is causing problems for you. Okay. Great British Pound, US dollar. Great British Pound, US dollar, we will have a look at. And yes, yeah, these are prop firm accounts. These two are prop firms accounts, and there are a few more that I use to show you guys how to trade. I never put my cash accounts online, ever. It's a bit like giving your bank account details out. I don't do that. And I got my reasons for that. And it's because just look around the internet and see what's out there. There's no way on earth that I'd put certain secure things out there. A prop firm account, I'll put it out there because for me this is, you know, it's something that if something happens to it, so be it. But my cash, that's a different ballgame. And so those accounts I protect with my life. And I also do not divulge amounts, because that's also dangerous and in many ways. So yeah, no, those are things that I keep to myself. Sorry guys, but that's just how it's going to be. Okay, that's just, I'm never going to change with that. I'm very, very cautious. Had my problems in the past with people, and that's one thing that I protect with my life. The funded one, these two are not funded yet that I'm showing you now. These two are challenges. The funded one is a $100,000 account, but for some reason or another, when I pick it up and I try and show you that one, my system doesn't want to bring it up. It doesn't want to show it. I don't know why it doesn't want to do that. Otherwise, I'll show you that account. I don't mind, but that one's a funded one. That one's nicely in profit as well. But yeah, I'll see if I can get it to work. And I tried again this morning to get it to work, so I could use that and show you guys that as well, but it just wouldn't come up. It was giving me a headache. But that's all. That's a funded account as well, that one. I wanted to show you that one. So we got, at the moment on funded accounts, I got 1 funded and 2 challenge accounts that are running. But it doesn't really matter to me. This is actually really for me to show you guys how to trade. And then my cash account is on the MetaTrader 5. And then I've got another cash account which is lying around, which is not doing much. And then I've got my investment accounts. And my investment accounts, those as well. Those are protected. Protected accounts. Very much protected. I can show you the shares, what you can do with them, but I ain't showing you the account number, that's for sure. Right. Yes, we did look at gold, and there was somebody wanted to look at Great British Pound US dollar. I actually think I've got Great British Pound US dollar on the other account. Yeah. Just have a look at it quickly. Great British Pound US dollar. No, I didn't leave it on here. That's okay, I'll put it on and we'll have a look at it. Great British Pound US dollar. And it's somewhere there. Put it here. So much easier to find it. Great British Pound US dollar. Okay. Want to see? You wanted to see what to do here. See, a lot of the guys were moaning that they can't see the charts because of this logical trading in the background. I don't know. I can see it fine from my side, so I don't know. Maybe it's just the colors of these charts or something. So that's why I just brought that other one up for you guys, so you can look on that one as well. Okay. Otherwise, we would just use the one charting thing to show you guys what's going on. All right. So this is the Great British Pound US dollar. I'm just going to draw the lines right here on the 4-hour chart. No, it's on the 1-hour chart. I don't want it on the 1-hour chart, on the 4-hour chart. If I take it up to a day, I just want to see what we've got. Look at the day chart on Great British Pound US dollar. Completely bullish. I'm just going to take this out of here. We don't need that. And then I'm just going to draw a trend line here. Great British Pound US dollar. And I'm just going to, what I normally do is just take it up and just see if there's a nice pattern. Okay, so you've got that. That's perfect. It is bullish as we stand at the moment. And also what you'll see is it's coming on to the support. So what you've got to do here is wait for a green candle to jump off of the support, giving you the continuation of trend. And if you get a red candle that breaks through the support and it's below this and pushing down, then it's changing the trend. But what I recommend, because we're on the day chart here, and we're going to go to the 4-hour chart, but while we're on the day chart, we'll put it to a line chart and just see if we've got anything here that gives us a bit of a support. Nice support level for a bit of confluence. There's not really a lot here. The support's really quite far away down the bottom here. It's not much higher up, and it's broken through the resistance, so it's above the resistance. So I'm not gonna bother with that on the day chart. And then I'm going to take it back down to the 4-hour chart. And if I look on the 4-hour chart, I'll tell you what I'm looking at on the 4-hour chart, which might be of interest, is there is a level of demand here at 134. So it could break through here and come and fetch that money before it goes. But it looks like it wants to bounce off of here and continue out to the upside. So still bullish. It remains bullish. In the short term, on the 4-hour chart, you can obviously see this very short-term bearish trend. But, 3 points, those two are so close together. It's not the greatest short-term trend in any way, shape, or form. You could use it and say, well, if it breaks to the upside and breaks through that, then I can take the long trade. That's basically what you can do with it. if you want to. That's if you want to trade the Great British Pound, US dollar. Okay, so there we go. Okay, back to this lot. Let's just see what we got here. Are we getting beaten up, or is it working out? So the only trade that's working out here today is the Euro Great British Pound, which has kind of gone against me as well because that was way up. The United States, South African Rand hasn't changed much, hasn't done any good. Brent has gone into a loss now, even though it was in a win. And gold is, while it's improved, it's still in a bit bad. But as you're position trading, you just leave the trades and you wait to see what happens. Now, if you start going into a little bit of a loss here and there, you've just got to accept it. I know if you're new to trading, it's a little bit stressful seeing trades in a loss. And that is, you just wait until it gives you the profit. Red, green color blindness is very common. Could be that why some of the difficulties. I know some swap green for blue on their green candles. You know, the big problem with the swapping of colors for me, and the reason I use green and red is because I trade both ways. I trade up and down. I don't care what color they are, but it helps me if they're green and red, because if I see a red candle coming out of the resistance and going down and closing, it takes me an instant to see it. If I see a green candle coming out of the support and giving me, like for example here now on this gold, I see the green candle breaking through the trend resistance. It's clear, it's like that. I find myself, when you change the colors to white, blue, or whatever the case, taking a second longer to look at which way it's going. Probably because I don't trade with that color, probably because I don't know that color. Perhaps if I'd been trading with that color for the last 30 years, it would be instantaneous. But when people show me charts and they've got different colors on their charts, it takes me an extra second just to figure out which one's long and which one's short. So I prefer green and red. Green and red works for me. And the tails I prefer to be kind of white so I can see where the tails are. That works for me. As far as this business of the red scares me, so I got to change the color, well, in my opinion, then your psychology is going to struggle. You probably shouldn't be trading. It's, you know, it really doesn't matter, but you need to know what's going down and what's going up. It's important. You know, if you're going to trade short, you're going to trade long. Does it really matter to you if it's red or green or black and white? It really doesn't matter, but you have to instantly see it and understand it. Yeah, for me, I'm not only trading long, I'm trading long and short, so red doesn't scare me. Red can sometimes, has made me a lot more money than you can think sometimes. It's exciting when red makes you money. It's actually more exciting than when green makes you money. You know, it can be nice when you're in a short trade and everything goes crashing down and it makes you a fortune. That's actually more satisfying than actually seeing a green one make you money. I don't know why. It's psychological. But like I say, for me, it's just instantaneously easier when I put gold on here. You asked for it now. And I look at it and I say, well, I've got my gold trade. It is starting to break to the upside. I see the green candle. I see it breaking through. I'm looking at the green and I know it's going the right way. So, you know, it's an instantaneous thing. You just see it. Because especially for someone like me who doesn't sit looking at charts all day, I go out, I come back, I look at a chart, and I can just look at the chart and I can see what's going on. I don't need even to draw lines in sometimes. You know, that's why I say it's unfair for me to say, like the market's 50-50, let's do a test, let's trade without lines. But it's rather unfair for me to do the trades, because I look at the trades and I don't need the lines on there. I can literally see where the chart's going, because of years and years and years of seeing these pictures, you can't stop them from coming into your mind. So the only way to do that experiment, what I do is I take maybe a family member who doesn't trade and say, you choose the trades and I'll take them and I'll manage them. And then you can determine whether it makes any difference to the trades or not. And guess what? It really doesn't. Really doesn't. So gold, I'm still bullish on gold as we stand. If I was taking this trade for the first time now, I'd wait, and I'd wait for that green candle to close outside of the trend resistance. I did over here. You see, I had the trend down here. It broke through. I took the trade, and it looked good. And then it created a new level over here. So it's unfortunate for me that I'm now in a new level, in a wider level. So I am now sitting in that trade. But that's the market. It's 50-50. So I took the trade when it broke through the first time, and it looked good. Now it'll break through again. That's not to say it won't create another level and start coming down again. So that's just how the market works. Because, you know, when they show you on these courses, it goes there, and it goes there, and it goes there, and it goes there, and it goes... The market isn't like that. It's not that efficient. It goes up and down, but it goes up and down in this sort of strange shape. It doesn't go down in that perfect zigzag shape that they always talk about. It goes down in not zigzag shapes, or up in not zigzag shapes. It goes up in odd, weird, wonderful shapes, okay? So just understand that. What you're looking for is just the line in the sand that says, I'll manage my risk and I'll work out the trade based on that. You'll notice that this trade I took on a 1-to-1. You can take a trade on a 1-to-1. You just have to manage the trade, okay? And try and make that profit more at the end of the day. Up 40% on Pudgy Penguins. So, Brewman, you've always got these strange, weird, and wonderful things that you trade. Probably need to be more degen. Is the volume indicator below useful for Forex gold trading? No, it's not. It's not useful at all. You know, these charts, I just haven't removed the volume, that's all. And you can trade with volume, particularly on indexes and shares and things like that. Volume will help you in one way or another determine whether a trade is good or bad. Or you can go into the details on volume trading if you want to, but I don't use it, and I just haven't taken it off. That's all. It's not useful at all. No, it's a waste of time. And let me just see the charts. Every time I load a chart on this program, this volume thing comes up with it. So let me just see if I remove it. Yeah, there you go. I can remove it. I just haven't bothered to do that. Okay, it doesn't matter to me. I don't need it. I'm gonna sit on every chart and remove the volume. Seriously. You'll notice on the other charts I don't have it at all in any of my other programs, to be honest. I don't have it. Look, there's the other charts. I don't use it here either. No volume. Don't use it. Okay, so it's just on those charts. It's there. Okay, just accept that it's there. I can't help it. I just didn't bother to remove it for you. Okay. But yeah, actually volume, it's actually a good question to answer. Does volume help you with Forex or gold trading? Definitely not. Certainly not. Total waste of time. It might help you with indexes, and it does help you with shares. If you want to use it, do you really want too many indicators? Do you want to use indicators? Like I said to you in the last show as well, the relative strength index is something that I used in the past a lot. But it's a very basic thing, and a lot of the big guys use it as well, where you sort of look at it and say, oh, it's overbought, I'll sell. Oh, it's oversold, I'll buy. And then you just buy and you just hold and you just wait and see what happens. The trouble with oversold and overbought is it can become more oversold and it become more overbought. So much of a muchness. You've got to have quite a deep pocket to control those trades. But yeah, like I say, you can go that route if you want to. Yeah, scalping, Nick, you know, scalping is not a great idea. as I always tell everyone, scalping, it's kind of, to me, scalping is a system without a strategy. and you can't make money without a strategy. Scalping is also short-term, short time frames, and if you're scalping, where's the strategy? And because if you've got a strategy, then it's not scalping, because a strategy won't allow you to scalp. If you put a proper strategy in place, there's no way you can scalp, because you've got to have a profit target if you have a strategy and a business plan. And scalping doesn't allow you to have a profit target. Scalping is just like, oh, I'm in profit, take it, quickly take it. So my question is with scalpers is always, how do you manage your trades? How do you make money? Because I tried scalping. Believe me, I've been there, done that, because I've tried everything in the market, and it's always like there's something new and flashy. There's a new shiny toy. Let's go and try it. So I tried scalping, and it's not that I didn't do it okay. It's just that it's demoralizing, because you take 8 trades, you win them all, because obviously you wait for it to go into green. It goes into green. You take a profit. You scalped it. You made $100. You made $50, whatever the case. You scalped a quick profit. Where do you put the stop loss? You want to make more on the wins. You don't want to be like targeting $50 for a $200 loss. It's insane. So what actually ends up happening is you take 8 trades, you win $10 on those 8 trades. Now you've got an $80 profit. You've worked really, really, really hard to win those 8 trades. Insanely hard. Believe me, you work hard to win those 8 trades on those scalps. And then the 9th trade comes along and it takes $1,000 off you, or it takes $500 off you, whatever the same. And it's demoralizing, because you worked so hard to make $80, you just lost $420 on a $500 loss. And you know why? Because when it goes into a loss as a scalper, you don't believe you can take a loss. You believe you will win every trade. So when it goes into a loss, you will hold it until you can make a profit. In fact, you'll probably dollar cost average or something ridiculous to try and keep the trade going, because you can't take a loss as a scalper. So it goes into loss and you think, well, it'll come back. I'll just dollar cost average it, and then it gets worse. And you dollar cost average it again and it gets even worse. And then you lose that trade, because there's a point where you can't take it anymore, and you get out and you've lost all that money. And then all the money that you've made was a complete, total waste of time. And if you think I'm talking rubbish, go and try it for yourself, and then come back and talk to me again, because I guarantee that it's going to happen to you. Trust me, I know what scalping is about. Volume is mostly helpful for scalp trading. Is VWAP useful? I hear a lot of people talking about that. The volume weighted average price, just for those of you who don't know what VWAP stands for. Abbreviations are a big thing in any business. I got a friend who's a pilot, and I can tell you, I hate him for abbreviations, but I love him as a friend. I was telling him, can you just speak English? But I know you don't want to write it out or type it out here. I understand that totally. But just so, like when I say FOMO, it means fear of missing out. I do like to tell people what abbreviations mean, because I know what it feels like to sit and listen to someone talk, and every third word is an abbreviation. I'm like, what on earth are you talking about? So like I say, volume weighted average price. So VWAP is useful, but only on the very low time frames. I have tried using it on higher time frames, or 4 hours a day, and it just doesn't work. It's just too close, and it just isn't viable. On the 5-minute and 15-minute, you can use VWAP. Just remember, on the 5-minute and those types of trades, 99% of traders lose money. I prefer, as you know, not to use indicators. I just use the price action. I use the trends. I use the support and resistance, because that just gives me a line in the sand, and it helps me to manage the trade. It's really not going to make much difference, and the indicators are generally lagging anyway. So don't keep looking for that shiny indicator that's going to make it better for you. Get into that never-ending cycle of doom where you keep looking for a better system that you think is going to make you money. It's not. You just got to, there's only 2 ways the market can go. There's only 2 ways a trade can go. You look at a trade, you're in the gold trade, you look at a trade and you say, I wonder which way that's going to go. you can only choose two ways. You can either choose to sell it or you can choose to buy it. Based on what you've drawn in there on price action, you're looking at it and thinking, which way is it going to go? You can basically work out which way it's going to go. Because if I put 20 indicators on here, you won't know which way it's going to go because one will tell you to buy and the other one will tell you to sell. And it will confuse the living daylights out of you and it'll just be a whole mess. So try not to keep looking for the next best thing, because the next best thing is insanely going to just mess you around, and you're just going to go into that never-ending cycle. Keep it simple. Don't wait for the moon to move on its axis slightly to the left and turn green before you can take a trade. Just take a trade. Just look for a trade, take a trade. Is it above the line? Do you know when we started trading? No systems. We drew a line through the chart, 20-day moving average. We worked it out, or a trend line, whatever the case. And if it was above the line, you buy. If it's below the line, you sell. Line in the sand. That's how we bought shares. Wow, think about that. That's how simple it gets. Don't overcomplicate it. The more you overcomplicate it, the more you're going to lose. The more you try to think that you're going to somehow beat the market, the more you're going to lose. The more you keep trying to add different things in. You see, you put all your concentration into terminology of the market, abbreviations, little things, and if this candle's here and that candle's there and there's a gap there and there's something there, then it's going to do X, Y, and Z. And you put all your concentration into that rather than just managing a trade and just figuring it out. I know I'm ranting on about that, but I'm trying to point out that's where we all go wrong. You know, I did it for many years. I believed that the charts were the sun. It was where the sun came up. I mean, I thought the charts were the only thing that could make you the money. And then I realized that all the charts can do is give you a trade. It gives you a high probability. It gives you the possibility to take a trade, because humans are creatures of habit. What they did in the past, they'll do again in the future. I always say that. And now you can look at a chart and say, you know, this might happen again because it's happened before. Basically what we do here with the price action, we sort of look at the trend. If it breaks through that, there's a possibility to go up. You know why it's going to go up if it breaks through that? Because every other trader in the world is seeing the same thing you are. And there's a good percentage of them that are going to trade positively based on that. And then you're going to be on the wave and you're going to go with that money. But it depends what they decide and what they want to do. Market open, run. Run, where should I go? That lands your plane in Antarctica, yeah. Yeah, if you don't want to run when the market's open, that's when you want to be. That's when you want to be at the charts making some money, man. Brent crude oil's not doing so well, dropping off. I'll just keep it forever. That's fine. And then the JAP 225. Guess that's not going to work out either. Let's just see anything going on here. US 500 is doing nothing. No, dead. Yeah, let's just see. Yeah, nothing happening there. What's happening in the news? Ooh, that's interesting. We haven't done the news today, have we? Time to do the news. So Delta's bouncing on the upside because for the first time in millions of years, an airline posts an earnings beat. I mean, airlines have been suffering for such a long time, particularly after the problems we had in 2020. Airlines, I tell you what, they've been having a tough time. And, you know, so many pilots actually, you know, lost their jobs at that time and whatnot, or got sidelined or couldn't make money, that they actually started taking on other careers. And Then the airlines struggled to get pilots again, so then they ended up with inexperienced pilots, and it was a nightmare for them. So yeah, it's been a interesting time for the airlines, and now you get Boeings falling out the sky, and everybody's like, "Ooh, we don't want to fly on that now, do we?" You know, these guys put so much into their safety, and then when you find out that someone's overlooked something, it's insane. But it takes a couple of years for them to investigate an accident on these things, so you can't assume anything when an accident happens. You have to wait and see what's going to happen or what's happened, but it's really bad for the name of the aircraft, of course. And even myself, I find myself getting on an aeroplane and I'm looking at what the make is. Like, is it one of those? Maybe it's going to fall out the sky. So yeah, no, yeah, it's not good for a business that, eh? Healthcare expert warns of coverage shock under Trump mega bill. You know, Trump's in the news every single day. Goodness me. Nvidia stock set to rise again. Nvidia partner sales saw early winner in the corporate exodus from Delaware. Coffee prices climb. You can trade coffee, by the way. I think IG trades coffee as well. They trade orange juice. Okay. Airbus taps Lars Wagner. Nvidia obscure. Nvidia's in the news big time. Trump's always in the news. German exporters don't want US trade deal. Okay. Delta stock going up as a result of great results. It's good to see an airline doing well. It's actually unusual. And it's nice to see an airline actually doing a little bit better, because I mean they've had such a bad run of it, let's be fair, that it is nice to actually see them finally get somewhere for a change. And it's been kind of unusual, eh? It's been kind of unusual. So what's happening with this one? This one really should be... Where are you going? So you're going against me again, and you should be going the other way. So that's actually quite interesting. This one is baffling me. It really is, but we'll see. That's what trades do. They baffle you. BTI reached a 52-week high. Where's BTI again? Okay, let's just go and have a look at it. It does seem to be coming down again. It did reach its double top. It reached its high, and it does seem to be coming down again. So Bitcoin seems to be dropping off a little bit. Hi, Rob. How close do you move your trading stop when in profit, or do you recommend not to use it? Thanks, Alan. And what I do with the trailing stop, as I showed on the other platform earlier, is firstly, what I'll do is when a trade goes into profit, I'll move the stop loss when the trade goes into a reasonable profit. So, for example, you got a $250 stop loss. So let's say the trade goes into $150 profit or something like that. Then I'll take the stop loss, I'll move it up to break even. And then from there, I'll look at the trade and say, okay, put a trailing stop on it, let it trail. That's great. And let it trail at that distance, $150 behind it. If you prefer 200, you can, but it's fine. Let it trail behind at 150. And trails and trails and trails. If it comes back, the trade costs you nothing. The trade is free. And you've probably made a profit as well if you've trailed it. Whereas what I do is if the trade gets right up to take profit, and that's your targeted take profit, you don't want to just take the profit. So what I'll do is I'll take the take profit and I'll just move it away. Just move it up slightly, but then I'll take the trailing stop and put it right up behind it. Close. $20, $30, $40, $50, right up there. So that if it comes back and takes it out, you've made profit. And if it doesn't and it keeps on going, then you make more profit. There's also the case for if the price goes in my direction towards an area where I can see, hey, you know what? This thing looks like it's going to go well now, and it looks like it's got a clear run all the way up. I'll actually add or double the trade because it's going in that direction. So you can do that as well. Keep an eye on that. Okay, so it looks like gold is also not giving us exactly what we want, but it is in the right place. Brent's going against us, Brent crude oil. And it's probably Brent crude oil that's costing us the money at the moment. Yeah. Okay. The Brent crude oil has moved into a nasty loss. And South African Rand. Yeah, you just got to sit back, wait, and see what happens. And then I've got a trailing stop on the other account on Brent, so we'll see if it takes it out. If it takes it out, I'm actually already in clear profit there, and it's one of those things. Just accept it. Take another trade. And that's how we work with trailing stops, yeah. And you can add to the trades if the trades look good. If the trades look decent, then you can add to them. Like this United States dollar, South African Rand, I'm so confident on that. That if this was to break above that level here, or even at 1814, I would actually add to the trade because it would be definite. It would be going that way. At the moment, it's just being a bit of a pain. Okay. We'll see what happens with that one. The DAX. What's the S&P 500 doing? Not a lot, actually. Not a lot. All things considered, it just seems to be yeah, it just seems to be it's giving a bit of a red candle, but not much. Not really dropping. I think Nvidia is really holding the S&P 500 up, and well, firstly the Tech 100, and then the Tech 100 is holding that one up as well. I mean, trading's 50-50. No matter what anyone says, it's always going to be that way. You never know which way your trade's going to go. You never know whether you're going to make profit or a loss. Ha. Yeah. This is why we need risk management. Without risk management, you just wouldn't know where you're going, and you wouldn't know if you're going to make a profit or if you're going to make a loss. You know, trying to convince people that the charts don't have a predictive capability and that a win rate's not going to make you money and the charts are not going to make you money is very difficult. And trying to convince people that you need to separate the charts from the strategy is also, it takes a lot of getting around. Understanding that psychology is the big thing in the market, that no matter how I trade or how you trade or how the next person trades, you can't copy them. You're not going to get the same result. You're never going to get the same result. You know, these guys sit there and they show you that they make so much money in a day and that's how easy it is. But you're not going to achieve the same result as that person because your psychology is different. Your fear level is different. The amount that you risk is different. The amount that you can risk is different. And the way you handle that loss and risk is different. A lot of people can't just position a trade, just walk away and leave it there, knowing that you might lose $250. Most people can't do that. Most people can't just let something run and see what happens for fear of that loss. In fact, if they're $1 in loss, they start to panic and start to wonder what's going to happen next. So, yeah, do think about that. Think about how you trade and what you do. Ruben asked, do I sail? No, I used to powerboat a lot. You know, the powerboating scenario. I used to do a lot of skiing and that sort of stuff. But I don't sail. No. It's something I would like to have achieved, but I never did. I never got involved in any sailing clubs or anything like that. But a lot of my friends did, though. But I got into the powered boat scenario more, mainly because one of my friends was a boat racer, Used to race boats, and that was I was always at his racing and stuff. And then he would set my boats up for me with his knowledge, which was nice, you know. But yeah, I actually don't bother with it anymore. Put that in the past. It was fun. Those were the days. Those were the good days. Don't do it anymore. Should still though. Yeah, it's addictive as well. A lot of fun. You need a lot of time. A lot of fun. Licensing is the big issue though. Yeah, you got to get the licenses and all that stuff, and just can't be bothered anymore. It's too much hassle. And then every year and all the numbers on the boats, and it's bad enough you got to do it for the cars. Sounds good, Bruman. That sounds fun. Yeah, that sounds really fun. Actually, a good friend of mine actually went overseas and climbed on Oak's sailing boat, and they did a bit of a holiday. It was actually quite good. A lot of fun. A lot of fun. So it's been an interesting day, and well, there was a few guys here. We had a few guys on the show. I hope you all liked the show. I hope you all enjoyed the show today. And I always try not to bore you guys and keep it exciting as much as possible, particularly in my videos. I'm really trying to make my videos better so that they're more fun and they're not as repetitive as they ought to be, because how do you change, what is, I'm like showing you guys a way to trade. I mean, you can't really change that. So it's going to be pretty much what I said last week. I might say again next week. But yeah, I try and make it as interesting as possible for you guys. And I try and bring up new ideas and new stuff that will help you guys. And I'm always looking at what I can make exciting for you and what I can make better for you guys, so that you guys can have a bit of fun with your trading and do a little bit better with your trading as well, and give you as much information as I possibly can where I can. Hopefully these live shows are good with you as well. Cool. That's always fun. Yep, I do like to have a bit of fun with you guys. It keeps me company as well. But guys, thanks for being here. Thanks for watching with me. I hope I gave you guys a little bit of value today, and there was something useful that you found that will help you with your trading. If you have questions, feel free. You can email me. You can drop them in the comments. I do try to answer every comment as much as I possibly can. But I don't know if you've noticed, but I've gone through 15,000 subscribers, which is, wow, I never thought I'd get to that with a channel like this. It's amazing. I appreciate it. It's really great. It's good so that everybody's interested. It is going to become a bit daunting trying to answer everyone's comments, but I will continue to persevere and try to do that. But with the understanding, guys, when you do comment and ask questions and that I do have my trading to do and my life and my job, and trading as it is, that's my job. Trading, that's what I do. I trade. So I have to do that, and I need time to do that as well, and to do my research and that sort of thing. So it is difficult for me to sometimes answer immediately, but I will where I can, and I try to help where I can. I started the YouTube to keep me busy, and I guess it is keeping me busy now. Getting me to that point where I'm getting busy. But yeah, I still will endeavor to try and always answer everyone's comment where I can. Thanks for being here, guys. Thanks for being part of the team. And I'm going to catch you guys on the rebound. Don't forget, keep your feet on the ground, reach for the sky, and we'll chat soon. Thanks for watching. And I will see you soon. If you remember, I'll probably see you in the morning, or you'll hear me in the morning with a members video. And if you're not, watch tomorrow's video, which will come out on Friday afternoon. And otherwise, I'll see you next Tuesday on the live show. Cheers, guys. Keep well.